Since 1993, the Philippine Central Bank, the Bangko Sentral in Pilipinas, has been responsible for maintaining a stable financial system, largely through the regulation of banks and other financial institutions. Believing that a stable financial system should benefit the country's entire population, it has also sought to broaden access to financial services where it can. Two companies were planning to offer services that could potentially bring most of the country into the financial system in a single move. The only thing was, neither company had any experience in this area. In fact, nothing they did had ever involved the BSP before. That's because neither of them were banks. They were both, in fact, mobile phone networks. But the response of the BSP would surprise many and have a profound effect on everyone involved, including the central bank itself. This is the story of what happened. Mobile phone ownership has grown quickly across the developing world, including poor and remotely located areas.
Even the poor, the $2 a day earner, the $5 a day earner will always have a phone.
So even where there may be limited access to financial services such as banks, mobile use is increasingly common and widespread.
I think that's a global phenomenon that there are more people having phones than people having bank accounts. No?
Malakas ang signal dito, kaya mabilis lang ang texting.
In 2001, the country's largest phone operator, Smart, launched Smart Money, a money transfer service. Smart Money allowed the transfer to take place between two mobile phones.
They all do it through the phone, at their convenience, at their homes, which saves them a lot of money.
Mobile payments and mobile banking were made possible by new technologies. But these new technologies threw up issues that the BSP hadn't encountered before. However, reassuringly for the bank, whilst the brand Smart Money was owned by Smart and relied on their phone network, it was actually a prepaid debit card account issued by BDO, a large Philippines bank. In 2004, the Monetary Board approved Smart Money and the service continued to grow. But this had not gone unnoticed. Globe, the country's second largest telco and Smart's fierce competitor, was watching. They had started offering customers the ability to share their prepaid airtime load.
Sharing airtime load is basically you have one prepaid subscriber who would then send over load to some other subscriber, and it's transferred real time. The other subscriber would now have load on his phone, and therefore he can now make use of it for calls or texts. It is a proxy for some sort of currency, which is why we developed a service called GCash, which is really a mobile wallet service, which is a monetary service.
But unlike Smart Money, GCash wasn't actually a bank. It was a subsidiary of a mobile phone company and thus didn't fall under the remit of the BSP. The BSP faced a choice: ignore it and continue as normal, or change the bank itself in order to embrace, encourage and regulate the service. So, in 2005, that's what they did, and GCash came under the BSP's remit.
We looked at the GCash approval as a controlled experiment. And at the outset, we had some safeguards in mind, including a requirement that electronic values issued are matched by real money.
For all our e-money, which is our currency, all the GCash is deposited or maintained in the major banks as well. So it is whatever funds that you put in the GCash wallet is brought into the financial system.
And that same year, the BSP created a new division called SITSG to specialize in understanding the unique challenges of mobile and other technology-based offerings.
They're the ones who have to ensure that all these innovations, all these initiatives to expand access are being done in a prudent manner.
We need people who specializes in technology, because technology is a highly specialized field. And we also need people other than specializing in technology who are well versed in banking rules and regulations. So you have to marry these type of skills.
Today, both mobile companies continue to compete for phone subscribers, but don't regard each other as competitors in the same way when it comes to mobile financial services.
Since this is telco-driven, there will always be competition from a telecommunication side, but I think from a mobile money perspective, from financial inclusion perspective, then I don't think competition should get in the way.
The BSP has continued to innovate with regulation that reflects changing technologies while maintaining stability in the financial system.
We are more than willing to learn from the guidance of the Bangko Sentral in terms of what they can do to help us mitigate the risk and also how to improve on existing financial services.
I'm very, very proud to say that we have really managed a very good relationship with our central bank.
And we don't believe that these financial services ought to be left unregulated. They should be properly regulated, but in a way that does not prevent them from growing. So therein lies the challenge.